Most Americans are leaving money on the table every single year. And in 2026, that mistake could cost you even more. The IRS has quietly rolled out updates that could increase your refund or reduce your tax bill. But here's the catch. Most people don't even know these changes exist. While everyone focuses on the standard deduction and basic credits, there are hidden opportunities buried inside the new tax rules that can legally save you thousands. And if you understand them early, you can position yourself ahead of millions of taxpayers who will file the same way they did last year and miss out completely. Let's break this down in a simple way. The 2026 tax landscape has shifted mainly because of inflation adjustments, updated income thresholds, and expanded eligibility for certain deductions and credits. One of the biggest changes is how the standard deduction has increased again, which sounds great on the surface, but here's the twist. Because it's higher, many people stop itemizing altogether. And that's exactly where hidden deductions get overlooked. Expenses like medical costs, state taxes, and even certain charitable contributions can still create an advantage if you cross that threshold. Smart taxpayers are now combining strategies, timing their deductions into a single year to maximize itemization instead of spreading them out and losing the benefit. Another major area where people are missing out is retirement contributions. In 2026, contribution limits for accounts like a 401k and IRA have increased again. What most people don't realize is that these contributions don't just build your future, they directly reduce your taxable income today. That means you could potentially move into a lower tax bracket just by maximizing these contributions. High-income earners are also leveraging backdoor Roth strategies more aggressively now, taking advantage of legal loopholes to create tax-free income in the future. This isn't some secret reserved for the wealthy, it's just knowledge that most people never take the time to understand. Now, let's talk about tax credits, because this is where real money is made. Deductions reduce your taxable income, but credits reduce your actual tax bill dollar for dollar. In 2026, credits related to energy efficiency, education, and dependent care have expanded or become easier to qualify for. For example, if you've upgraded your home with energy-efficient systems or even installed solar panels, you might be eligible for credits that significantly cut your tax liability. Parents are also seeing updated benefits through child-related credits, but the rules have changed just enough that many families won't claim the full amount they're eligible for, simply because they didn't update their filing strategy. There's also a growing trend among freelancers and side hustlers, and this is where things get really interesting. With the gig economy booming in the US, more people are earning income outside traditional jobs. The IRS now pays closer attention to this, but at the same time, it opens the door to deductions most W-2 employees never get. Things like home office expenses, internet costs, software subscriptions, and even part of your phone bill can be written off if used for business. The problem is, most people either don't track these expenses properly or they're too afraid to claim them. Meanwhile, those who understand the system are significantly lowering their taxable income legally. And here's something almost nobody talks about: timing your income. In certain situations, especially if you're self-employed or have control over when you receive payments, shifting income between tax years can make a huge difference. Delaying income or accelerating deductions strategically can reduce your overall tax burden. This isn't about avoiding taxes, it's about understanding how the system works and using it to your advantage, just like corporations and high net worth individuals do every year. At the end of the day, the biggest difference between people who overpay taxes and those who don't isn't income, it's awareness. The 2026 IRS changes are full of opportunities, but only if you actively look for them. If you keep filing taxes the same way you always have, you'll keep getting the same results. But if you start thinking strategically, planning ahead, and using these hidden deductions and credits, you can turn tax season from a financial burden into a financial advantage. And that's the real game, keeping more of what you earn legally and intelligently, while everyone else continues to miss what's right in front of them.